Welcome to Let's Talk First Time Buyers. I am delighted to be joined today by Ryan, Patrick and Damien, all qualified and experienced mortgage and protection advisors. Now, before we get stuck into first time buyers and answering all those questions, Ryan, why don't you tell us a little bit about yourself, please?
Sure. Yeah, my name's Ryan and I'm a qualified mortgage and protection advisor. I've been in the industry for around 8 years now. Started off with one of the main high street banks, then moved to mortgage advice for an estate agent in Colchester in England. And now I've been with Daid Mortgages now since February of this year.
Fantastic. What about yourself, Patrick?
No, same as Ryan too, qualified mortgage advisor now, been in the industry a wee bit less than him, a couple of years now, but fully qualified there in the last year and also with Daid Mortgages now as well. So.
Fantastic. And Damien?
I've been a bit longer than these two. I'm qualified since 2005, so you can do the miles yourselves. But so I've been working as a mortgage and insurance broker that length of time, so wealth of experience dealing with first-time buyers to remortgage, self-building. I've seen it all from one recession to this. So, and working with Daid for the last 2-3 years. So
wonderful. Well, let's dive into first-time buyers and let's answer some of those questions that people often have. Can you, at the start, Ryan, just tell me what is, for people that maybe don't know, a first-time buyer?
Sure. So a first-time buyer is really simple. It's literally somebody that's never owned a property, never had a mortgage before, either in the UK or abroad, and that's it.
That's it. Perfect. And Patrick, what is the process for a first-time buyer when they're looking for mortgage advice?
It's basically just assessing their situation firstly, knowing what they can afford. Do they know what they can afford? You basically want to get them approved in principle then. That's basically just proof that they can get the mortgage. They go and view houses and stuff. So some estate agents might not even let you view a house unless they have proof that you can get the mortgage. Okay. And once you get approved in principle, then it's finding a home and then doing the full mortgage application.
And I imagine those people can be with you for quite some time.
Some people might not get it for a couple of months and then you nearly forget and they come back and be, oh, happy days, and then you can go ahead and get them sorted.
Because more recently as well, I've heard from people saying, actually I've been helping someone for say a year and then they finally as first time buyers got into the market. So it's not a case of a quick process, you can be with them.
It can be a lengthy one too, so it can.
Because I remember Damien buying my first house and that whole process, and it just been feeling very alien and not quite sure and being really nervous. Is that something you find with first time buyers?
Yeah, well I've been on both sides of it. No, I was a first time buyer before I was a mortgage broker, so it's a second time for people first time, normally it's a couple buying the first house together, setting up a family home, that's their long-term goal. So it's a second time for people to buy, we're here just as a mortgage broker, giving them a helping hand to guide them along the process, use our wealth experience, our knowledge of the mortgage market to help them, take a lot of the burden away from them, and as I said, to guide them through the whole process. I was saying we take them from the cradle to the grave, so we basically take them through the whole process till they get the mortgage offered, look at their protection of the mortgage, And
I imagine that's one of the benefits of speaking to a mortgage advisor is when you are unsure or nervous, you've then got somebody there in your corner that's dealing with it all, reassuring you, can answer all your questions, and that's part of the joy of going.
Part of it, the whole part of the process, and they start off with clients, but eventually, can become friends, and you see them moving into the first house and the home developing down the years.
Well, a lot of first-time buyers particularly, they're looking at how can I make this dream a reality, and one of the ways to do that is things like government schemes. And Ryan, can you tell us a little bit about what government schemes or supports available for first-time buyers?
Yeah, absolutely. There's quite a few government schemes available for first-time buyers at the moment. First of all, there'll be one called the Lifetime ISA, which is a really good way for a first-time buyer to save for their first deposit in their house. So basically the way it works is you can put up to £4,000 a year, or £4,000 a tax year into that. And then at the end of the tax year, the government will add 25% on top of that as well.
Free money?
Free money, exactly. You can add to that. And the good thing about that is as well that if you're a couple applying together, each person can have one of these accounts, so you can even double up on that as well. Fantastic. One of the other really good schemes is shared ownership in England, or co-ownership here in Northern Ireland. And the way that works is that you buy a percentage of the property, so whether that be 25%, 50%, and then the housing association owns the other part that you don't own, and you pay rent. So the good thing about that would be that you wouldn't have to save as much of a deposit. You only have to pay the deposit on the part on your individual share. And again, you won't have to find a mortgage for your individual share as well. So if somebody's like struggling with getting the affordability for a big mortgage, then that could be a good option as well.
And I imagine that brings down the deposit required. You can get a better loan to value,
Exactly.
and your rate can
well.
apply as well. Fantastic,
Absolutely.
thank you. So Patrick, in terms of first-time buyers, from what you've seen, what hurdles do they usually face? What have they got to overcome to get that first property?
First one's nearly being realistic. Some of them not too sure what they can afford and what they borrow. They come to you wanting a 300,000 house on this amount of income, and you have to sort of let them know it's not really possible for your income levels and such. But the main one would probably be deposit now. Most lenders would want at least 10%. Some offer 5%, but the rates aren't great. But that's something what we will look at. If they come to us, we will let them know what deposit you need for which lender and can you afford it.
Completely. I can completely see as well, you know, if you've never been there, you've never seen it, you've never gone through it before, you know, it's, you see people in houses, but you don't really know that affordability process.
That's
versus
what, going on to what Ryan said there, sorry, just about the ownership as well. That's what helps a lot of people don't have a lot of deposit. We would nearly recommend that as well because it is a very helpful tool.
What about self-employed people, Damien? I know we get a lot of inquiries and people coming along saying I'm self-employed and they've had problems historically, particularly when they go to maybe their own bank, they go, I've been rejected. What do self-employed people need to do?
Just come back to a point you just mentioned, bank. So another deposit would be the bank of mum and dad, the gifted deposit. So, you know, first-time buyers don't normally think about that, maybe that they can use a gifted deposit from their parents or a family member. Self-employed, terms of the self-employed, most banks will look for 2 years self-employed income, so that'll be accounts or SA302. Now, some of the banks are a bit more flexible, and underwriting is not done by a computer, it's done by an individual, where they'll look at maybe self-employed accounts, maybe somebody that's only self-employed for a year, and depending on what the previous employment was, maybe they were a computer engineer and they've gone into self-employment as a network or a computer engineer. Some banks are a bit more flexible to work with the self-employed, so my advice would be speak to the broker first, see where you are and take it from there. As long as you can prove income, so some can prove income even if they're only in the last 12 months, there are banks out there who look at that and are flexible to work with self-employed people.
Particularly speaking to people and obviously hearing stories for self-employed, it's the questions that often, if you're trying to do it yourself, the questions the lenders ask are alien. Even if you are a existing homeowner, the questions can be alien, and you put down the wrong figure and they come back and say, no, that's not going to work, and you go, how can that be possible? Whereas actually dealing with someone that's doing it on a regular basis, I imagine makes it far more robust for them. No, that's perfect. Now, Ryan, back to yourself. I mean, let's talk about one of the big things that we often see and we know is a problem for some people is their credit score. So if someone's got a couple of defaults on their credit score, or they've had, historical problems with their credit report, does it automatically mean they can't get a mortgage, or are there things that you would recommend people do to?
Yeah, absolutely. So the short answer is no, it doesn't exclude you from getting a mortgage, which is good news, but there is quite a lot of things that you would need to consider. So first of all, I would definitely recommend speak to a mortgage broker first of all. What we'll do is we'll sit down with your credit file, we'll have a look through everything that's there, and we'll see exactly what is possible, what isn't possible. So even if we say we can't get a mortgage right now, we can put a plan in place to say if you do this, this and this, maybe in 6 months' time, yes, you'll be at a place where you can apply for the mortgage. One of the main things why it's good to speak to a broker is it's likely that you'll be declined by one of the main high street banks. Okay. So it's a good idea then to speak to a broker, and then we can then look at some of the specialist lenders that specialise in adverse credit. And with that as well, it just means that we can.
Your whole because your whole of market as well, isn't it? It's when your whole of market, particularly, you guys can then, you're not just dealing with your own bank or the bank down the street. Exactly. You're basically saying this is the entire market, and this is everyone that can potentially lend to you, and let's kind of go through that process and actually find not just any mortgage, but find the best mortgage that's suitable for for your
Exactly.
needs.
Yeah.
And that sort of brings me nicely on to kind of affordability. We were speaking there about historically before about affordability, and how that's actually calculated, because I think a lot of people will see it as, well, I've got the 10% deposit for a £300,000 house, but on affordability they can't actually get the mortgage. So how does that work, Patrick? Can you just explain that for me,
It sort of
please?
comes down to interest rates too. Most banks will do a stress test, what it's known as, just to make sure, even though you can get the mortgage eventually, is that going to leave you basically busted then, where you can't afford the payments, and say interest rate rises again, are you going to be able to keep up with them payments as well? They're basically going to make sure you can stay in the house without being a big excessive strain on your finance.
And is there a calculation in terms of, for people that maybe are watching, is how do you then work out what affordability and how that would work?
That'll be something you need to sort of come to us for.
Okay.
We would go through your income, see if you've any debts, stuff like that. We'd work it out for you, and then we could work out your max borrowing, depending on which lender is the best rate at the time and which one would suit you.
So it's best is really to speak to someone that's
It's
actually
best to speak to
professional.
someone, because we look at the whole market, so we would know which one takes you, can you afford it, how much you can.
Perfect. Now, one of the questions we get asked quite a bit, and it's one of those ones where if I didn't know the answer until I actually spoke to you guys. So, and that is often the case. I'll speak to you and you'll say, Stuart, that's not possible. But one of the questions that we get quite frequently is, a person that's maybe owned a house 10 years ago, they sold it 5 years later, went into rented accommodation, they've been renting for 5 years. Do they become a first-time buyer again because they're moving from renting to purchasing once again? And potentially also they're buying a property with somebody who's never owned a property. So one person that's never owned a property versus someone that's not been a homeowner for 5 years. How, from yourself, Damien, how does that work?
With most banks, this will class them as a first-time buyer, because a bit different if they currently had that property in place. But if they sold it 5 years ago, majority of lenders still class, because the new applicant is first-time buyer. It's probably more question around stamp duty levels and that whether it hits in revenue class them as a first-time buyer or not, and getting the stamp duty
In government
deductions.
schemes would probably not see them as a first-time buyer.
Yeah. So it's really around that would be the basis of it. So again, speak to the mortgage broker and we'll advise and get
look into it. And I mean, in terms of if you were looking to buy purchase your first property in the next 12 months, Ryan, what would you say to someone? I mean, 12 months time, I want to be on the property ladder. What would you say? What would you tell me to do?
Yeah, absolutely. So the first thing I would say is just try and save as much deposit as you possibly can. So the benefit of that is whenever you come to apply for the mortgage, the more deposit that you have, the less of a mortgage that you're going to need. So it's more likely, maybe if you are in a low income, then there's more of a chance you'll be able to get the mortgage that you need for that purchase. And again, as mentioned earlier, using one of those schemes like a lifetime ISA or something would be a great option for that as well. Yeah, absolutely. And also as well, what I would say is pay off as much of your unsecured credit as possible. So the likes of your credit cards, unsecured loans, car finance. I'm not saying you have to pay everything off and be completely squeaky clean by the time you apply for the mortgage, but the more you can get those balances down, then the better chance you have whenever you're applying for the mortgage, because the more credit that you have, the less the banks are really going to be able to lend.
It's like a weighted scale, isn't
Exactly.
it? It's a case of affordability. Come back to that affordability piece, is if you've got quite a lot of hire purchase or PCP agreements and you've got unsecured debts that go alongside it, even if it's affordable at the time, the banks or lenders are going to kind of take that into consideration.
Exactly, especially with interest rates higher, then a lot of banks have a higher criteria and stricter affordability rules, things like that as well. And probably just the final thing would be check your credit file early. There's loads of great websites you can go on to, Check My File, one of them, and that will basically show up any late payments or defaults or anything that might be there that you don't know about. It has happened quite a lot of times where the clients maybe paid a credit card off, but whatever's happened with the company, they've registered it as a late payment and they don't actually realise by the time they come to apply for the mortgage. So if they can identify that early, it gives you a lot more time to be able to phone up the company, try and get that sorted, get it off your credit file before you apply for the mortgage then as well.
I would advise them pick up the phone, speak to a mortgage broker, and basically see where they are now and what they need to do for the next 12 months to improve it, as Ryan said. But get a realistic picture of what they can afford as well, and the affordability and what they could borrow, and then we can advise how they can improve that, as Ryan said, about savings and reducing debt and so on.
Like we were saying, is someone could be with you for quite some time before they're actually applicable and suitable to then apply and move forward with the mortgage. But actually having a plan in place is often just the first thing you guys will do for them, is to say,
It's like get them prepared, they go ahead and apply for it.
yeah.
It's not an overnight process. It's average 3 months to 12 months process for most first-time buyers.
No, and another thing that I remember being completely shocked by as a first-time buyer, albeit it feels a while back, as a first-time buyer, I remember feeling, what are all these additional fees that I have to pay? So I guess, Patrick, I'll ask yourself, all those additional fees in terms of solicitors and all the nitty-gritty, the things that you don't think about,
Most people would think obviously you have to pay a solicitor's fee and a broker fee, but not a lot of people know about stamp duty land tax as well for first-time buyers. Yes. But most people also don't know that they might be exempt up to a certain amount. Okay. But that does change, so it wouldn't be something that you would need to come to us just to double check at the time what your limit is. Is it going over? Do you have to pay any sort of tax? Okay. But your solicitor's fees and stuff, that's something we'll make you aware of, obviously, before you go ahead and pay them.
And you guys will basically sit down and say, right, okay, budget.
That's one of the first things off the bat. We'll let you know how much obviously your payments will be, how much your fees, so you're not going, I've got this sorted, and then you get hit with a last minute bill at the very end and you're like, what's this for?
Oh, you don't want any nasty surprises.
You know the whole way through what your fees roughly will be.
Okay. Perfect. And would you say, Damien, that it's better, and again I'm speaking to you guys, is historically talking about individuals, is they might come to you when they've found a property and say, I now need a mortgage, or is it better to arrange the mortgage or get a decision in principle, understands what affordability is there, and then go and search for a property? Is there a better way to do it?
My advice would be always speak to your broker first, get a realistic idea of where your affordability is, where your budget is going to be. Your affordability may say you can lend 300,000, but you may only want to have a mortgage smaller than that to suit your affordability. So as a broker, we can answer those questions. Once we do gather all the information, we can do agreement in principle with the chosen lender, and you'll have a better idea exactly how much you can borrow. Okay. And then you can look at property. You can do this a tangent process, but speak to the broker first, and you can still be looking at properties, but when you have agreement in principle, well, X lender will lend me 225,000, so I'm not going to be looking at a £300,000 house because I've only 10,000 deposit. I'm going to be looking at something that's more realistic.
And sometimes you can't even view houses without it. Some people won't even let you view houses unless you have it.
They expect you to have it, and
so you're not wasting your time and the person's time thinking you might not be able to even get the mortgage as well.
And there's really no harm in actually picking up the phone to an advisor to say.
It's a very simple process too, so it is.
That's the best way as well. They're, from an individual, a first-time buyer trying to get onto the mortgage market, they've got a decision in principle. They can then take that to property viewings, and they'll know exactly where they can go in terms of budgets because you've told them.
And it also lasts a couple of months as well, so it gives them a time to actually go and look for a house as well, so you're not in a rush or anything like that.
Okay. So decision in principle, is it usually 3 months?
It's around 3 months, most of them.
And then it can be renewed thereafter?
As many times as they need.
Okay, that's perfect. In terms of, I'll come back to yourself, Ryan, is in terms of first-time buyers, obviously getting the property, and I know we touched on this earlier, getting the property is the most important part, but what would a first-time buyer need to think about in terms of protecting themselves and protecting the property as part of that process, and what do you guys do?
Yeah, absolutely. Yeah, so we're all mortgage and protection advisors as well, so one of the really important things to consider whenever you're buying a house is, especially whenever you're taking out a mortgage, you're taking on tens or hundreds of thousands of pounds of debt, and what you really need to consider is what would happen if you were to pass away before the mortgage is paid off. So in reality, what's going to happen is that it's going to be left up to a loved one, to pay that bill, whether it's done through like a will, or if you don't have a will, then the government decides then who's responsible for paying off that loan. So one of the things that we can arrange, which is really important, is life insurance, which basically means that if you do pass away before the mortgage is paid off, then the insurance company will pay a lump sum to your loved one, your spouse, your child, whoever that may be, and they can use that money then to clear the mortgage off completely, or if they want to use the money for something else, they can do that as well. The other thing really to consider as well is that whenever you have a mortgage, the only thing that allows you to pay that mortgage and stay in the house is bringing home a paycheck from your job or at the end of the month. So if anything happens, such as an illness or accident or something that stops you from working, after your sick pay runs out, then that could leave you really vulnerable, not being able to pay the mortgage, and eventually that could even lead to the bank coming and repossessing the house. So one of the other things that we can rearrange is a thing called income protection, which is basically simply just like a sick pay arrangement. So if you're signed off work by the doctor, then the insurance company will pay you a salary every single month so that you can keep paying the bills, keep paying the mortgage, things like that until you return to work. And you can even have that where it actually incorporates into your sick pay from your job as well. Okay. So it maybe doesn't kick in until after your sick pay runs out from your employment. And doing it that way can even reduce your premiums and things as well.